Right, let's finish off this topic. I think this is. I've just come back here again because actually no. Let me just go back. Let me go to the actual question in the book. So we're at 66. So what this question is asking is so we've got the same data from 63, but this time it's saying that the company is looking at adopting environmental flow accounting, where material and system costs would be apportioned on the basis of weight. So it's sort of asking what's the net cost of waste and scrap. So, I mean, it's a cost naturally, but sometimes you're able to sell this off, if you like. So in a way, we're just comparing what that net cost is. Overall, it will be a cost because that's the main, cost that's gone in. So, what we have here, and it's saying that you want to do this in which materials and systems are apportioned on the basis of weight. So, well, the first thing here that we're looking at, if you like, is to split those costs. So let's just do that first. Let's just do that first. I will just get my notes here for us to do that. So I just lost my page. Okay, here we are. 60. Yes, here we are. So the first thing we need to look at here is to sort of calculate what the actual, if you like, cost is per, if you like, what is the value of that waste. So we have 80 kilograms, 80 pounds, if you like, per kilogram, because we have 80,000 divided by 1,000. So you have 80 pounds, if you like, per kilogram. And then what we now have, if you like, we have scrap of 300. We know that because this is the 70s was good, and of that, if you like, 1,000 kilograms, that's what comes out well. So in total we have scrap of 300. So we know that total scrap, if you like, the total input cost there, if you like, a 300 times 20. And that's sort of what we're sort of going with. And I think that's the first thing to pick up on here, is that if you like, following what the question is saying, we're apportioning this cost on the basis, if you like, on the basis of weight. So the waste itself, if you like, is 300. If you like, the initial entry cost, so to speak, of 30% of it. So I guess it's probably the first time you're doing this. We don't actually see any of these in the textbook, but it's just good to sort of see what's going on. So what you now have, I'll just write here and just sort of use this one here, is that since I have 80,000 divided by 1,000, and that's 80 pounds per kilogram, and I know I have 30 kilograms of waste. I know that nicely. So 300 kilograms of waste, sorry. So that's I could almost draw a T account. If I'm looking at a waste account or loss account, I have total waste of 80 times 300, which comes to 2,400, if you like, in terms of waste. Now, I have additional, well, some of it is definitely going to go waste to waste, if you like, here, of 1,000, because I'm not getting any of this. This is additional waste, definitely going. But I'm going to be able to recover 3,000 of this, if you like, over the by selling some of that waste. So I've invested. I mean, it's just a question about net cost, really. It's just sort of pushing you to sort of think about what net cost is. So we have 20, again, like I said, we have 24,000, the actual initial cost investment. We lose another 1,000 based on the waste evaporation, and then we are able to sell some of it, if you like, for 3,000, thereby having a net waste figure of 22,000. So that's what's going on over there with that. Right, so the answer is 22,000 there. So let's just go to the rest. The rest are just kind of like, what's the word? The rest are written or theory questions, and let's sort of deal with that very quickly. So again, I've talked about this business of flow accounting. That's important. So flow accounting is where we break up costs. I think these are the things you're more likely to see, the flow accounting sort of theory questions on these issues. So it says here that talking about flow accounting, I've highlighted before, we're breaking things up into cost, system, cost, and delivery and disposal. That's correct. And we record material inflows and balance this with outflows in terms of with flows in terms of input and output. This is what happens for the input-output method, so not quite the flow method. The flow method breaks these costs up into three. So this is a different method. This second one, this is the input-output method, if you like. And if we look at the third method, the third statement, yes, so you can see here it says that in MFA, output costs are allocated between positive and negative product costs. So you do have positive, if you like, costs, the actual cost of the real, like for example, the question we just did where we had 70%, and then you had negative product costs, which you had the waste and the scrap, if you like, costs. So if you like, that's kind of the point there, that you have that split between delivery and disposal sort of events going on. So that's what's happening there. So the third one is good. The aim of flow costing is to increase the quantity of material, which as well as should have a positive effect on the, if you like, really, but really ultimately, well, no, not really. If you like, really the aim of flow accounting really is to reduce the quantity of material. If you like, not increase the quantity of material, to reduce the quantity of material, as well as having a positive, if you like, effect on the environment, if you like. So and that's what we're really trying to do. It's really about trying to reduce the quantity and not increase the quantity. And that's where that is wrong. So it's the first answer and the third answer are good. Right, again, what are we talking about here? Which are the following regarding issues? This is just, I guess, a standard question. You can just almost analyze it. It's always difficult to define environmental costs, so that's correct. Environmental costs can be categorized as quality-related costs. Yes, that's really endpoint costs. Cost control can be an issue, of course. So definitely all of these are very much true. If we can't identify costs correctly at the beginning, so it becomes true. So all three are correct. So the answer here for 68 is D. 68 is D. Flow cost accounting is a technique which can be used to account for, yes, again, this is just repeating what we've just said. The main category is material, system, delivery, and disposal. We don't have anything as waste flows. We don't. These are the three main ones that we have with flow accounting. And finally, accountants find it difficult dealing with environmental costs because we can't quite trap them, if you like. The difficulty is they're hidden, they're minor, they could be long-term, but it says accounting systems rarely split off these costs automatically. So this isn't a reason. I mean, really, these are the main reasons. It's difficult to catch them. I mean, it's nothing to do with the systems. It's just difficult to just be able to trap these costs or see what they are in the first place, if you like. The systems split them. The systems, we've just seen that. We've just seen a flow system. We've seen an input-output system. So if you have good systems, you can actually split the costs and do some good work with it. But when it says accounting systems rarely split up these costs automatically, then that's not quite correct. So which one? The one that's not a reason is D, right? Because all the other three are, I think, much stronger answers. Cool, great stuff. So that brings us to the end of our environmental costing and EMA, environmental management accounting. And yeah, so please, I guess as usual, just keep going through the material. Key points are big points that you want to see in terms of theory is that what we want to be comfortable with is the fact that we have two main EMAs that we're going to be seeing a lot of, and that's flow costing and input output. That's the main thing I need you to sort of work with. And flow costing is where you break it up into materials, systems, and delivery and disposals. And as opposed to input output is where you literally ask what goes in and what goes out. And you can read up on the nature of these costs as being internal and external. Internal being numerical costs, waste that we can actually see and create invoices for, as opposed to external, which affect the population. Those are the main concepts behind EMA. Okay, great stuff.